आईपीओ पे आईपीओ आईपीओ पे आईपीओ आईपीओ पे आईपीओ आईपीओ पे आईपीओ मिलती रही है, लेकिन अलॉटमेंट नहीं मिला मिलॉर्ड, लेकिन अलॉटमेंट नहीं मिला, मिली है तो सिर्फ ये आईपीओ।
What is an IPO and why do companies come out with an IPO? Watch the whole video to know the answer. Hello guys, welcome to Rooftop Trading, where we talk about trading and investment. Today we'll talk about IPOs. IPO stands for Initial Public Offering. When the shares of a company is open for public for the first time ever, that is called as IPO or Initial Public Offering. Now you might ask me, before an IPO, where was the shares? And why would a company come out with an IPO in the first place? These are valid questions and are building blocks to the knowledge of share market. Let's answer these questions with a hypothetical story. Imagine you want to start a business. Let's say you want to manufacture chaddis. If you haven't watched my video about jockey, here is the link. So you start the business with your own capital. Let's say you invest a small amount of about 1 lakh rupees to buy the machineries like the stitching machines or the raw materials, etc. You sell it in your small locality or in your small area. The business booms. People love your product. Now you think of expanding your business in your village. But for that, you would require a much more capital. Let's say you need around 10 lakh rupees. You want to, let's say, buy more machineries and employ more people. So you have two options to get this 10 lakh rupees. Number one, you approach a bank and ask for them for a loan. There is a big drawback with this. That is, there's always a sword hanging around your head. That is the payment of installments. Yes, you have to pay back the loan in a stipulated time period, no matter how the business is performing. This puts a lot of pressure on the cash flow of the company, and hence the growth of the company diminishes. Option number two, you approach your friends and family for the 10 lakh rupees. So you go for the second option. You take 10 lakh rupees from your friends and family, and in return you give them 20% share in your business. That means whatever the business is making, whatever the profit the business makes, 20% of that will go to the friends and family, and you keep the 80% of the remaining. If you observe carefully, initially you owned 100% of the business, which was worth 1 lakh rupees. But now, even though you own only 80% of the business itself is worth 50 lakh rupees. Why? Because you give 20% for 10 lakh rupees to your friends and family. So the 100% of the business is valued at 50 lakh rupees. So now your 80% is worth 40 lakh rupees. Observe carefully how your net worth has increased even though your percentage of shareholding has gone down. So now there are two shareholders, you and your friends and families. You are known as the promoter of the company because you started the company and you run the show. So you take this 10 lakh and put it into the business and expand the business in the village. And the whole village loves your chaddi. The demand for your chaddi is increasing. The business is going great. Now you think of expanding the business even further to the nearby villages and within your state. For this, you will require a capital of 1 crore rupees. Now again, you have two options. Number one, you approach the bank. Now again, you know the drawback of getting a bank loan. So you go for option number two, your friends and family. But this time, even for your friends and family, 1 crore is a big amount. So you go for the third option, the venture capitalist and the private equity firms. So these are the group of people who are looking to invest only in such type of growing companies. They have ample amounts of idle cash lying with them. Now you strike a deal with them and offer 20% of your business for 1 crore rupees. So now there are three shareholders, you, your friends and family, the venture capitalists. Again, Observe how the value of your 60% is 3 crores. Now you take this 1 crore and expand your business within the state. Everyone in the state wants your chaddi. Your business is a super hit. You become even more ambitious. Now you think of pan India. You think of expanding your business across the country. But for this, you need a lot of capital. Say you need around 1000 crores. So how do you get this 1000 crores? Again, now we have 3 options, right? Number 1, going for the bank and asking for a loan. You know the drawback. Number 2, friends and family. Impossible. Number 3, venture capitalists. Even for VCs, 1000 crores is a lot. So, what are the other options? Do you have any other option to raise such huge amount? You use your final trump card. Go for an IPO. You ask money from the common people of this country. The population of this country is 130 crores approximately. So even if, hypothetically speaking, if each one of them contribute 10 rupees, you raise a total of 1300 crores. Now you give 20% to the public in exchange of 1000 crores. Now there are 4 shareholders: you, your friends and family, venture capitalists, and the public investors. Now your 40% is worth, wait for it, 2000 crores. So now you know why companies go public. It's a win-win situation for both company and public investors like us. You get to invest in matured companies and possibly get a good return on investment. But obviously there are high chances of companies fooling innocent public investors. To mitigate this, Government of India stepped in and formed a statutory body to protect the investors' interest. And that body is called as SEBI, Security Exchange Board of India. It was formed in 1992 and everything related to stock market is regulated by them. Anything and everything related to stock market is looked after by SEBI, including the IPOs. That was all about IPOs. As a public investor, what do you need to invest in an IPO? You need a bank account with internet banking activated, you need a demat account, and you need a trading account. That's all, and you're good to go. That's all for today, guys. I hope you enjoyed the video. If you did, make sure to like and share, and don't forget to subscribe to the Rooftop Trading. Until next time, peace.